Hi everyone, welcome back to the Harbinger VC podcast. Today we have joining us Chee-We, who is the founding partner of Oakseed Ventures. Chee-We invests solely in early stage enterprise and core technology startups and actively helps them with networking and strategic advice to help them succeed. Chee-We studied electrical engineering and computer science at MIT and has been programming in C and C++ since he was 14. Prior to founding Oakseed, he was managing partner at China Rock Capital Management, CRCM, a venture partner at Redpoint Ventures, and he led Cisco Investments in China and was previously a McKinsey consultant. He was a seed investor in many enterprise and core technology startups, including Kyligence, Fastone, Oushu. With Chee-We today, we talk through several developments in China's enterprise and cloud market, including trends across SaaS, data analytics and AI, data infrastructure, and more. We also discuss the impact of geopolitics that has brought about an opportunity in import substitution in China away from global chipsets and core enterprise software. Finally, Chee-We shares his views on how to assess technical deals and founders and offers advice to aspiring technical entrepreneurs. So, we have a lot to talk about today. There's a lot of interest from global investors and founders and operators about what's happening in China when it comes to cloud and enterprise and deep technologies. So before stepping through a lot of those in details, we'd like to first hear from Chee-We about his personal story and experiences. So welcome, Chee-We.
Hi everyone, my name is Chee-We. I started Oakseed Ventures in China to focus on enterprise and deep technologies. I'm a geek. I taught myself how to program in C when I was 14. To develop a word processor for my mom because WordStar, WordPerfect, and Edlin were all too complicated for her. Going to MIT was a dream come true where I participated in early research in AI and chatbots as well as integrated circuits for low power communications. I interned at Xerox PARC where almost everything we know about computing was invented, including object-oriented programming, graphical user interface, mouse, and local area network. And also at Bell Labs, where Unix and transistors were first created. I started my professional career in information security, where I led a team to build an encrypted phone and hard drive, which are still award-winning at CES after 20 years. Right before my investing career, I spent 2 years at McKinsey after Harvard Business School, where I advised telecom operators on mobile operating system and computing as a service before this was called cloud. I began investing in enterprise tech in China at Cisco. We were probably the only team solely focused on this in China. Our mandate was to invest across the enterprise stack, from integrated circuits, storage, security, cloud, big data, AI, Internet of Things, and SaaS. We did so with a global perspective, looking for world-class companies in China, and also with a value-added approach where we sought to help our companies with our partner and customer access. I spent a lot of time taking our startups to meet our sales team, channel partners, and customers. We were also value-added LPs in venture funds that were focused in areas of interest to us. After Cisco, I transitioned over to CRCM and Redpoint, where I learned portfolio construction and fund management. It was there I decided to focus entirely on early-stage enterprise tech. I founded Oakseed to focus on enterprise tech. Unlike elsewhere, there are few, if any, VCs just focus on early-stage enterprise tech startups in China. Yet when I was at Cisco, we began to see truly world-class enterprise tech startups in China. For example, Kyligence. Due to a number of factors, they are now world-class engineers and in particular technology architects and innovators in China, which are building the best enterprise technologies anywhere. This may not cut across every field yet, where Silicon Valley still has the lead, but in selected areas. Later stage funds and public markets are now beginning beginning to recognize the value of these startups. And I believe having an early stage enterprise focused fund will be good for the industry and also deliver great returns to investors.
Chee-We, thanks for sharing your background. Clearly, you've done a lot over the past 20 years. And I think being a geek is super helpful for investing in some of these areas. So in terms of Oak Seed Capital, we'd love to learn more about your fund. So can you tell us a little bit more about your fund's overall approach to investing, what you focus on, what stage, what are some of the criteria that you look for when it comes to interesting opportunities? Love to learn more.
Sure. Oak Seed is looking for ambitious, talented entrepreneurs starting companies to attack very difficult problems that enterprise face. And our promise to you is we will help you with introducing key partners, customers, and advise you on marketing and strategy or simply being your cheerleader. You will not be dealing with a VP who is trying to just size you up, but a potential thought partner who understands technology and business in a deep way. We are focused across the entire enterprise stack, from SaaS and tech-enabled businesses on the very top, 5G and IoT, to data infrastructure and information security. You don't need to meet partners who would rather spend time with consumer investments because we don't have any. We like investing early, as early as just having a business plan or prototype, because that's where we can apply our technology understanding and market insight to identify potential winners and help them be successful. For our investors, this drives the potential upside, which is important because the road for enterprise startups can be very long. We apply a convicted approach to investing. This is possible because we can reduce market risk and technology risk through very careful due diligence. This allows us to spend more time with fewer companies to help them succeed. Our goal is to deliver 5 to 10 times return for our investors through patiently waiting for the right investment, working very hard to win, and committing to helping them be successful.
Got it. So understand your fund's focus on these areas and how to go about trying to generate returns, or at least your goal for returns. But if we take a step back, can you tell us a little bit more about this area that you're investing into? So again, it's a mix of cloud enterprise, some more deep technologies, I think a little bit semis as well. So there's a lot of folks who are outside of China trying to understand what this market looks like. There's no really large companies in China in the enterprise space. There's no Salesforce, for example. I think there's few companies that are over $10 billion in market cap in China, whereas in the US there's many such companies, and enterprise and cloud has been all the rage for the past 10 years in particular. So again, if we're going to take a step back, how would someone who's not in China look at the cloud opportunity in China? A lot of moving parts. Where do we start first to try to understand this opportunity?
Sure. So yes, indeed, IT spending has been small in China, even as a percentage of GDP. There aren't that many big companies, but they are, and mostly in hardware, right? So these are the Huawei, the Lenovo, the Inspur, the Sugon, and then H3C, and then a whole bunch of system integrators. Many of them also listed domestically. But software in particular, as a percentage of IT spending is only 3%, 3 to 4%, whereas in the rest of the world it's typically 15%. And that explains why historically you don't see that many software companies at all. However, what's changed is that with the mobile internet, today you see internet, mobile internet, big data, IoT, and AI becoming the top agenda for many enterprises. This started with internet companies basically leveraging all these technologies, and then crouching on the markets of traditional companies, for instance, in finance and in insurance. And so now enterprises have no choice but to reinvent themselves, and they have to use state-of-the-art technologies to have a mobile experience, omni-channel experience, and they also have to employ big data and analytics in order to stay ahead. And so what you can see now in the startup space is a whole slew of startups in the enterprise space across SaaS and applications on the top, business services down to infrastructure services, data analytics, and so forth. And there is actually evidence that there will be more and more of these companies and then listing in the stock market as well. So you can already see, for instance, over the last few years, even in China, you see the areas of public cloud, other than Ali Cloud, which is like Amazon Web Services in China. Two companies have successfully listed, Kingsoft and uCloud. And then we are also seeing big data companies like Kyligence and PingCap that have gone from C to Series C in less than 2 to 3 years, and we are expecting those companies will become the next set of companies that will become public and change. It's a gradual change of the entire IT industry. So I mean, overall, it is true that the IT market in China is definitely not as big by any measure compared to the US or the West. And then it is true, today that it's largely hardware and system integration. But many startups are now emerging to provide SaaS and analytics and cloud and data infrastructure solutions to enterprises, which are now under increasing pressure to stay ahead and increasingly competitive market environment.
Mm-hmm. Yeah, I definitely see that, Chee-We, and there's been a slew of Chinese enterprise or cloud-based company going public. So Kingsoft clearly has been performing reasonably well, and Agora went public a few weeks ago, and their valuation is really quite high. So again, I realize this is a very big topic. There's a lot to tackle when it comes to cloud opportunities, and we probably spend multiple episodes. So perhaps today we can focus on a few specific areas that you've been looking at. And you were just talking about databases like PingCap, Kyligence. I think you mentioned SaaS as well. These are two things that global investors and founders know very well. So could you talk us through what you're seeing when it comes to SaaS and let's say SaaS to start with, or databases in China?
Sure. So yes, SaaS is a very hot topic. It's driving the value of many companies from Microsoft to Zoom, Salesforce, as you mentioned. Just eclipsed Oracle in market cap, right? That's amazing, right? And yet SaaS is very nascent in China, but there are many startups that are trying to be the Salesforce or to be the SaaS of China. It hasn't. There've been many waves of SaaS companies in China. I think there were waves of SaaS companies that were targeting SMEs. There have been SaaS companies that offered a freemium model, and some of these startups in the past have been challenged, right? On SME market, this is a market that although it looks very big and it accounts for a significant part of the GDP, and there are large numbers of such SMEs, it turns out that they don't have deep pockets. They also often do not have a very long lifespan. It's been said that average SME in China has a lifespan of only about 2 years. And then with the freemium model, with SaaS companies in China have typically faced a challenge of converting free customers to paid ones. Typically the conversion rate could be as low as 2%. But we're seeing new type of SaaS in China, and these type of SaaS companies do not just digitize a workflow. It's not about recording. It's not about just digitizing a workflow. That's really SaaS of the past. The new SaaS really combines analytics, AI, external sources of data to really engage and to really truly automate workflow. And so in China, the boundaries between SaaS and tech-enabled business services are also blurring very quickly. It's sometimes you don't see a distinction between the two, and I might even say this is happening faster in China than say in the West, where in the US, SaaS or software companies, typically a software company, a SaaS company, and then business services is very distinct. Here in China, it's blurring very, very quickly. We are also seeing new trends in what's called low-code or no-code platforms. And this really enables end users to build their own applications that enable the workplace of the future. And this is something the VCs are looking at actively in the US, and in China we're seeing new companies in this area as well. Talking about databases or data infrastructure, this is an area that a lot is happening. With data infrastructure, oftentimes there will be significant bottlenecks that show up when you have volumes of data increasing very rapidly, exponentially. And so new innovation is always required to keep up with larger volumes of data, new ways of analyzing and making use of data, and then also whenever the underlying hardware changes. And our observation is, whereas in the past many technologies were imported from the US and by multinational companies, data infrastructure is an area that going forward there will be many more domestic companies, and whether these are the big companies like Huawei or Lenovo putting together a solution, or whether it's actually done by startups. So you can see, for instance, data analytics have gone from Hadoop to cloud and Kubernetes, and then now the next thing is serverless, right? So we see both big companies like Ali Cloud as well as small startups trying to offer AI on serverless architectures, for instance. And then data warehousing and databases are now seeing new growth areas like graph and time series databases, and compute storage fabric has basically gone from conventional to converged and hyperconverged, and then now it's what's called composable. So many of these areas will see new innovation. I do not anticipate startups in the US being able to enter the Chinese market going forward. I expect many of these new disruptions to be led in China by Chinese startups.
Got it, Chee-We. So a lot to unpack here, but I guess just focusing a little bit on databases in China because we brought up Kyligence, PingCap. There's just many more projects. I'm just trying to get a sense of how well do these companies monetize. In the U.S., some of the database companies have done quite a good job with their open source, open core approach, where they basically offer up the code for free, but they offer other services. It could be security or something else in order to monetize very well. In China, some of these companies I've heard aren't really generating much revenue. So how do you see them developing over time?
Sure. Different companies have taken different strategies. Companies like Kyligence, for instance, have actually taken a rather similar approach, having an open source version, Apache Kylin that everyone can use, and then extensions, enterprise version that has more features, like you said, enterprise features around security, but other other things as well, and then better performance, and then working with end customers to deliver the actual commercial value that comes from using analytics. That's one strategy, because a company like Kyligence is delivering something that is truly world class. Actually, a company who has also gone abroad and worked on not just the Chinese market but opportunities elsewhere, and then leveraging a global traction to raise money and grow. There are also other ways that many of these startups have succeeded. You will find that in China, as you move from the more generic data infrastructure to providing a service, providing an actual business analytics that's closer to the enterprise being able to generate more revenue, for instance, then you would find it much more easier to monetize. A lot of the spending these days in enterprises is held in the hands of the business unit leaders, not so much in the CIOs, though they work, I think, very closely together. So to the extent that a solution, a startup is able to actually drive the top line of a business unit, you will find much more willingness to pay on the part of the company.
Got it. Yep. Thanks for sharing that perspective, Chee-We. Since we're on the topic of some of these companies that have world-class talent or are pushing products and projects specifically for China, but also could compete against products or solutions in the U.S. or other countries, gets me thinking about the elephant in the room, so to speak. Because there's quite a bit of tension going on between the U.S. and China. There's geopolitics going on, and I was thinking there's certain areas in China that seem to benefit from that. So what I mean, it could include some of the semiconductor companies, the chipset makers. A lot of these public companies in China have seen their market cap skyrocket and have pretty incredible price to earning ratios of like 100x, right? Like pretty ridiculous stuff. But not just semiconductors and related companies, but also even some of the companies we're talking about right now, databases and alike in enterprise. So could you talk us through what you think about this continuous tension and how that might impact the growth of these companies that you're looking at?
Sure. So to set the context, China has been trying to be independent, or at least be less dependent on foreign technology for many years. This started out as for instance, in semiconductors being one of the major causes of trade deficit. In fact, the trade deficit due to semiconductors has been larger than that of oil for many, many years. However, what has happened really in the last 2 years, starting with ZTE and then now Huawei, is that the very survival of Chinese IT companies and even China and the whole entire IT industry and the Chinese economy has been threatened, and when you have exports of certain critical components to China being entirely limited, when you have blacklists of startups being drawn up, and then now potentially the ability of companies to list in the US, and so basically going forward, Chinese companies and the government will try to be independent on foreign imports if they can. And there is a phrase actually coined many years ago, 自主可控. This actually came about actually when Edward Snowden revealed Project Prism, but now it's on hyperdrive, which means Chinese government really wants to have its own chips, and in the past, there was a phrase that was called removing IOE from China, I representing IBM, O representing Oracle, and E representing EMC. I don't think that's so explicit these days, but you can see the Chinese government's desire to be truly independent of foreign technology, and this really cuts across the whole stack, from chips to basic software and hardware. Now, not all of that is possible. It's probably very challenging to replace Intel and ARM processors, Microsoft operating systems and Oracle databases from legacy applications. But for new applications, you would find Chinese companies and the government very cautious on whether it is dependent on a foreign technology. You would find that the Chinese enterprises and the government would want to use open source if they can, or a Chinese vendor. And so, for every new innovation in the US, whether it's in a new type of database, let's say a graph database, or a new type of data infrastructure, for instance, as I mentioned, composable infrastructure, going forward, it is very clear that these markets would be entirely, in China, it will be entirely serviced by Chinese players.
Got it. And Chee-We, how does that impact your investing? So, some of the trends that you're mentioning, or if we take a step up, not just the import substitution, but in general, given what you're seeing, how does it impact your investing? And how do you go about finding good investments, performing due diligence, given their circumstances?
So that actually has been a good sign, a good change for us. It means that there is a protected market. It means that there are also a lot of talent that are coming into this sector, which in the past is considered very challenging because you have the dominance of foreign players, right? In the past, trying to create a new infrastructure startup is impossible, right? A lot is entirely done in the Valley, or maybe to some extent in Israel. Now with the market opportunity, and also that some of the Chinese talent who have been in the US, whether it's working for startups or even just doing their masters and PhDs in the Stanfords and MITs. They are coming back, sometimes forced to come back, and they will be starting startups in the areas of enterprise technologies, because this is an area that they feel passionate about and they have expertise on. And so that's actually very, very good for us. Now, having said that, it does not mean that you can deliver good returns by just backing every company in the with an import substitution theme, because you still have to spend the time to do the due diligence and make sure that indeed this is a company that has the best technology, has the best commercial team to execute, and then you are going in at the right valuation. Oftentimes in China, when something gets too hot, then valuations go crazy, and it may not be a good investment.
Got it. It's good to keep in mind. What else do you look at when it comes to investing? So, with regards to, let's say, team, with regards to the solution that's been developed, how do you go about conducting commercial due diligence on very technical products and things of that nature? Love to get your perspective on it.
Sure. So, if we took a step back, later stage venture in China really places a premium on two things. One, the ability to scale really, really big, and then two, a perceived scarcity of what's being built. So that means our entrepreneurs need to be, one, very ambitious, and then two, to have a world-class technical background and is developing something that's very special, very unique. I like the teams that have a combination of strong technical and commercial founders. The commercial aspect is often neglected, but commercial side is often needed, because you need to build a clear marketing message for enterprises, and the product managers need to be making the difficult choices of what to be and what not to be, and then also what use cases to go after, and then what features to prioritize. So yeah, this side of things has to be driven by a very clear commercial plan, not so much of a technical plan. I also place a strong emphasis on the team being at the forefront of technology and pushing the envelope. For application side, the team must understand the business challenges and have available at their disposal the ability to implement state-of-the-art technologies with excellent user experience. For data infrastructure, it means the team understands the bottlenecks of conventional solution and are making architectural choices that enable a solution that are orders of magnitude better than what's already available. It is highly, highly crucial to always link technology to a use case. One must never fall into the trap of a solution looking for a problem. And to complete commercial due diligence, I often spend time with end users and CIOs to understand the use cases, but also partners and like system integrators, which are needed to put together the solution for an end customer. I often get asked the question, how do you know how strong a CTO or founder is technically? And it really boils down to this. In every area for an enterprise startup, there is an envelope of what technology can achieve. And then beyond that, there are serious trade-offs. Sometimes there is even a computer science theorem, for instance, the CAP theorem. And CAP is a short form from consistency, availability, and partition tolerance. So that says that you cannot achieve all three at the same time. You must have a trade-off. And so when I do due diligence for a company, I try to get myself educated at where that technology boundary is by talking to experts and learning about the technology myself. Then I spend time with the CTO or the founder and see where his understanding is. There are the CTOs that don't understand the limitations of technology or where that state of the art is, or where things will get challenging. These CTOs are not the world-class founders who are pushing the envelope. They haven't gotten there yet, and that's why they don't see where the limitations are or where the trade-offs are. That means whatever he's working on, unless there is another know-how that's required from outside the technology realm, maybe in the business realm, it will be quite easy for a competitor to build exactly what he's thinking of building. Then there are the CTOs that appreciate the limitations and trade-offs that technology forces them to make. They are already thinking of solutions and are making architectural choices. These CTOs are at the forefront of the technology envelope. Then there are, now and then, CTOs that are not only appreciating the limitations and trade-offs that I am aware of after speaking to a host of experts, but these CTOs understand other challenges and issues further down the road. These CTOs are truly pushing the forefront of the technology envelope. Startups that are founded by the later two types of CTOs, in my mind, stand a higher chance of being successful because what they build will have fewer entrants, fewer competitors, and copycats.
Right. And Chee-We, could you perhaps walk us through some of the investments you made prior? So, and give us examples of some of these founders that are leading these companies, why you decided to back them.
Sure. So let me share with you the stories of two entrepreneurs in the data infrastructure space, and hopefully they can serve as inspiration to future entrepreneurs. So Luke Han of Kyligence was with eBay in Shanghai. And eBay, as everyone knows, has no business in China, but they have an R&D team. And eBay wanted to perform multi-dimensional analysis on very large sets of data, their own data, which was stored on Hadoop. And think of it as like performing pivot tables that you do on Excel, but for billions of rows of data. And so they got their Shanghai R&D team to work on it and build initially this tool for themselves, an internal tool. And then eBay decided to open source what they built, and that became Apache Kyligence, the first ever top-level open source project from China. And then what happened next was, customers ranging from Citibank to China Mobile began to use it and began to ask Luke and his team at eBay for technical support. And the team decided to basically quit and start Kyligence to build an enterprise solution around Apache Kyligence and help customers with their most challenging analytical problems. Cite another example, Xinji the founder of Fastone, was with EMC. Xinji was probably the youngest technical director at EMC. He led the team that built EMC's hyper-converged infrastructure (HCI) product line from nothing to becoming number one worldwide. He paired up with his college classmate and former colleague who had become a sales leader at Amazon Web Services in China to start Fastone, which provides a proprietary high-performance computing cloud solution. And this is truly proprietary and world-class. It's not a copy to China kind of strategy. He really thought through where the technical bottlenecks were and created an entirely new solution. And then basically the solution is now used by industries in China, cutting across genomics, which needs a lot of high performance computation to do genome sequencing and so forth, to semiconductors for simulation and IC design, and the latter of which, semiconductors, is now seeing a huge uplift given where the U.S.-China relationships are. So Luke Han of Kyligence and Xinji of Fastone, in my mind, represent a sample of world-class tech entrepreneurs. They are not doing a copy to China strategy that many predecessors did. And to me, what's most surprising is that this is happening in the enterprise tech space in China, where what they are doing is not just best in China, but best everywhere in the world.
Got it. Yeah, it definitely sounds like a set of very impressive founders. And Chee-We, having to examine this area and the various layers in an enterprise stack, and also work with some of these top class founders, do you have any advice for for other entrepreneurs that are looking to build businesses in these areas?
Yeah. So my first advice is really to be different and choose a difficult area. The scariest thing about starting a company is after 1 year of diving into doing it, there are 5 startups trying to do the same. You will find it when that happens very difficult to stand out, and you have to compete on price. I often hear entrepreneurs saying, "That's okay. The market is big enough," and that's one of the biggest fallacies, because yes, the market may be big enough, but the customers will get you and your competition to outbid each other in RFPs and tenders, and that basically means it's a competition on price and a race to the bottom. And this is very different in the consumer space, right? My second advice is to really focus on commercial value that your solution brings to a customer. Technologies are too often inward-looking. They try to make the world better, not a particular customer. But frequently, the world may be better, but no one is willing to pay big money for it. Companies pay for someone to solve a pain point, not for removing inconveniences. So try to work on the top 1 to 2 priorities for your customer, which could be the CIO, or now these days it could be the HR or the finance department. You may be working on an analytical tool, but end of the day, there must be a commercial benefit to someone, to the marketing department, to the finance department. It must mean something to them. And then finally, move really fast. Be willing to make mistakes and learn quickly. The difference between a winner and the rest often boils down to being the first few and speed. In China in particular, so because Chinese VCs would throw money at the first few quality teams and then totally shun the later ones because they feel that the window is over and that there are players in front that have loads of money. So deliver quick results in short cycles, and then always be in the market to raise money, which is a rather unique feature of the Chinese startup and VC market.
Got it, Chee-We. That's really helpful advice. Thanks for sharing your views on what's happening in this market. To me, to many of the investors that are listening to this podcast, and also to founders who are trying to draw inspiration from your experiences. I realize I only have about 45 minutes, so there's still a lot to unpack and cover about the black box that is China's enterprise and cloud opportunity and cloud market. But I hope this is the first of many conversations that we can have. Chee-We, thanks so much for your time.
Thank you.